So, good morning, everyone. Welcome to the show.
Good morning, Henry. Good morning, Purdia. It's Friday. Ready to go.
Yeah, it was a busy week. Busy week.
Good
So,
morning, my friend.
but yeah, guys, we have a couple of interesting topics today. But first things first, let's not forget our most important topic, the all famous risk disclosure. So, never trust anything Steve and I are telling you. It's a pure entertainment and educational purpose to your own thinking, no financial advice whatsoever. So, therefore, enjoy the show. Let's go. All right, good. Where are we, Steve? What happened?
Yeah, it looks like we're getting some news pre-market, but I'm having some trouble, Henry. You got to help me out. What should I label this impulse that came in pre-market? It's it's a meeting. Keywords are meeting, negotiation, de-escalation. What should I call it, my friend? Before we put it on a chart, you have to help me out.
let's call it
What should we call
the pre-weekend market call.
it?
No, just I don't know, like negotiations 2.0. It's like 20.0.
Ceasefire 2.0, maybe?
Yeah, it's good. Yeah, maybe. Yeah. Or MOU 3.0. MOU. No,
MOU.
2.0.
MOU 3.0
Yeah,
or
2.0.
50.0?
Yeah, I'm not sure.
Okay, 3.0. Done.
Yeah, it's tricky, right? At one point,
Yes.
you just don't know
You don't know.
what's actually the topic is.
Yeah, I was afraid today. We
Just
have
don't-
no major economic news incoming. I was like, oh, no impulses, but of course, our good friends have created a headline wherever it came from. Of course, you don't know exactly where the source is. We are
Yeah, I
always
mean,
neutral, my friends.
Isn't it funny? We just talked about it once, like Tuesday, when the whole thing broke out over the weekend, and we said like, "Hey, most likely they will calm down the markets because there's just it's basically just showing some strength, but there's nothing behind, right?" And it's exactly what happened. So
Yeah.
that's a bit of a funny story to me, but yeah. If you have been in the markets long enough, guys, you will see that the history repeats itself. Not always exactly, but very close to it.
Yeah.
So
Different headline, same impulse.
yeah. Okay, let's dive into it. So basically, as I have stated, some interesting news today is also I always forget the name. SK Hynix. SK Hynix, a Korean chip maker, is basically it's also a heavyweight, and it's about to be listed on their Nasdaq exchange. So it's a rare, like on the Korean index, and now they want to go international, and it's like sevenfold oversubscribed, and it's going to be a major test for the AI story, right? For the AI narrative to see, all right, is it still hot? But I mean, if it's sevenfold oversubscribed, then one could think that it most likely is still a hot take, right?
Yeah.
And
we know how keywords are. If it's AI, Henry, then of course the trend is your friend. Anything related to AI these days is getting accepted. But then again,
we should call it. We should actually change the name of Purdia to Purdia AI Capital and just push it through Purdia, and then just push it towards an IPO. Then AIPO, you know.
Yeah, it'll be the first AI prop firm, the first AI stream. Yeah, I like it.
That's funny, right? Yeah, you can now let your agents trade for you officially.
No, we need the manual trading. We need the human emotion.
Yeah.
Don't take that away from us, Henry. Please, we need the human aspect, my friend. Don't take it away.
It will not go away, right? All right. So good. So we have that. I'm curious to see how it will play out, but I have a strong take how it probably will be playing out, right? Then we actually have some signs on ES that it looks much stronger than NQ. So I want to showcase that later.
Sure.
Then we have also oil Iran. Always, it's still the pressure is on, but oil is consolidating, right? Slightly negative outlook. Therefore, I mean, we talked about yesterday. As long as oil is not going up and is rather sitting in a range or slightly going down, it's bullish for the stocks. So therefore, nothing changed there. And yes, tell me, what's going on in Canada?
In Canada, we just follow the US, Henry. Whatever the Americans do, we do. Like in the World Cup, they lost their knockout stage, so we had to lose our knockout stage. You know, we just follow the leader. But on the economic news front, Canadian.
Yeah, I think it's not on your screen, but we had some employment change and unemployment rate, and it,
let me just
was slightly better than expected.
Yeah, because on the US side, not much going on, but with the Canadian side, we did have big news. Unemployment change, doesn't look too good, Henry.
Yeah, well, at least
it is greater than the forecast, but the thing is, I don't like to look at forecasts too much because who knows where this number comes from, Henry, the forecast. What I like to look at is the previous. Let's compare it to the previous. So 18,000 compared to the previous 87,000. Even though, sure, it's up from the forecast, which I don't know where they got this number from. But from the previous, it's quite low. So to me, it's a miss. Unemployment rate actually went down, which is very interesting, 6.5% from 6.6. We didn't have as many games as the US in the World Cup, but, we do have big events right now. It's summer, especially where I'm living. There's big summer events. So that's also increasing job opportunity. So I think the summer is a wash, and let's maybe focus on September's numbers, not July's numbers, Henry, because the summer months, tourism, this and that, it does pump up the jobs a lot more. So, but it's just interesting to see. At least, our unemployment is going down. I don't know how unemployment it is over there with you guys, but for us, 6.5% is pretty good. So it's pretty steady.
Yeah, I think Europe, it takes it a little bit, like it takes another while, maybe another 1-2 years, and then it will start to feel all the economic pressure from all the bad policies that have been done over the last 10 years.
10 years. Yeah.
I mean, at one point, all the financial stimulus will be running out, and every country basically went into huge debt cycles, right? And but it's nothing that is sustainable, and giving away money without investing it, it's never it will only bring you that far.
Yeah, exactly. Well, we know, every cycle must come to an end, and the push for, like you said, innovation, in a way, also entrepreneurship, push the people for ideas, for new, sure, it might be a little too late for the AI race, but there's going to be new races for the future. So, there's always time for innovation and investments. So hopefully that comes in with the EU and Europe as well, because I'm sure it will one day.
Maybe not.
Well,
at least not in Europe. It's not.
But there's a lot of smart minds too. Everyone's very well educated. Everyone gets their degrees. So the time will come, because
but it's being held back by the policies, right?
Yeah.
By all kind of things. Like you can basically, it's super hard here to develop if you want to do something AI related or software related. You have so many regulations, like on.
So even with AI, even with this new AI push, it's been tough.
Yeah, it's you almost have no chance, right? So you need to be basically. I mean, if you develop something, you need to check if you violate anything. That can be from data collection, from like newsletter, like news sources, right, from the internet scrapings. If you go on a personal level, it's completely worse. Health wise, like on a health level, it's you can completely forget about that. So therefore, Europe is really not doing itself a favor, and it's basically lagging behind. All right, let's make the change towards the markets. Let me start with the big picture, and then we change.
So what you get, what everyone, so what Henry's signaling is that he's going to be the white shining leader in Europe. Everyone follow Henry. Newsletter X, follow him. He's
Newsletter
going to have
X.
some good ideas, and he will be the leader of Europe.
Coming down. I told you, Purdia AI.
Yeah, I like it.
No kidding, guys. All right, let's go. So daily chart NQ. Again, right, we are sitting right in the range. What actually makes me a little bit more bullish than it did last week or in the beginning of the week is the correlation to ES. Because if you take a look at it,
and that's ES chart, right? Yes.
Yeah, it's the ES chart.
It's breaking
S&P 500. So you see, like we had a breakout, and like from trend lines, basically, let's not confuse people. Let's remove this. So it's basically like a continuation flag, right? If you zoom out, so like a continuation pattern, continuation flag. We could not, like, we tried to break out, could not go below, took out this wick low here, basically made, excuse me.
And this is one advice I can just say. No financial advice, you guys. But this is why you never take the breakout, even on intraday, because look how it came back and retested at least the 50%, even the 618 on the fibs if you're a fib trader. But you can use maybe the breakout as your confirmation, wait price to come back, so you get a better price entry, a better risk reward.
Yeah.
But most traders, they have no patience, Henry, and they want the big breakout. So that's.
I mean, the problem with the breakouts is always the same. People always only remember the trades they have not been on, right? So it's much harder. Like FOMO is much harder to the people as an actual loss. So it's basically, if you are missing a trade, and it's like, let's say it would have been like a really nice breakout here, and the market would just like went up that like vertically, everyone would have felt the pain, right? Like, oh, next time I will not wait for the pullback. And that's actually what happens, right? So people are always only remembering the ones that they have not taken, but tend to forget the 100 times where they have actually taken the breakout and it didn't work.
Yeah.
So, and this is where the smart money, especially the algorithms, are making the chunk of their money. They're basically fading all the breakout traders to the reversal strategies. And a couple of times when they are getting hit, it's completely offset by the large amount of the profitable trades that are going the other way around. So nevertheless, just maybe one little exercise. If you have something like this, let's say you have a triangle, you have an uptrend, and the price breaks out, right? What you want to see market come down, stabilizes, and then on a micro level, let's say 1 minute, 3 minutes, 5 minute chart, 10-minute chart, you have another pattern there, and then you can take the breakout. But by this point, on a big picture like 15-30-minute chart, you already saw the picture. You saw the breakout, you saw it came back, it could not go deeper, and then it goes up again. So you get the confirmation of the price going up.
So let me guess, we can call this the breakout and the retest. So look, you guys, we explained the strategy in less than 5 seconds, and that's the beauty of it. That's all you need.
And there's like, and that's it. And there's and therefore, again, I repeat myself over and over again. This is how trading actually works. Like this part here is the actual entry. It's like 10% of your overall. I mean, I think at one point soon we need really to make a proper video about this topic. So, but let's say this is your trading strategy. Just 10% of it, maybe 15. Nah, it's less. It's 10%. Is the actual entry. It's the actual setup. The other 90%, it's what matters. It's your psychology, it's risk management, position sizing, drawdown management, size management, patience. Yeah, sitting on the hands. Basically, news, understanding correlation, odds stacking, so combining different styles that help you increase your edge. And this is actually the reality. And one more thing is really to focus on consistency rather than on outlier results. And then you get the reality on social media, and it's completely the other way around. If you watch it, you have the feeling that nothing else exists because It's like 90% of the whole topics is basically just about setups and entries.
Yeah.
And only a small fraction is talking about psychology and system design and all of these things. And this is, I think at one point we need to make a video. And so therefore, really, it's not hard. It's if you're, I can tell you one thing, and again, no financial advice, but please, you can backtest it yourself. But if you only trade this setup here, and you're really patient, and you are really sitting on your hands and you wait for it to play out, I am really, really sure that you could make it a profitable strategy. And that's the thing. And I think that's like what people are really underestimating, that it doesn't need to be complicated. Look here, it's basically what I've been talking about. So let me clean this up, this mess. So one push up, right? So we broke the trend line. All right, first try. Went all the way back, took out, like we had support area sitting here. It was our support area. Took out the support, no continuation there. So instant reversal, up, support becomes resistance, goes up again, tries to re-break a second time, cannot make it, breaks below. Our support is still, like, our resistance is now becoming support again because it gets reactivated, cannot hold, right? So the market just collapses through. And this is ugly. This is, like, to be honest, this is ugly. If you're trading at, like, I don't know, 5-minute chart, you most likely will lose a couple of trades, and therefore you need to test those things, how they will work out. But after that, like it played out and it made its range, right? Especially now you're in the US session. Again, we are re-establishing our trend line. You see here, this is the retest of the trend line. Like, the trend line has been accepted. And this is the importance of therefore we're always showing this big picture plays. So the trend line has been accepted 1 time, 2 times, 3 times. Oh, actually here, 4. It has been accepted a couple of times. So I'm not saying it's a perfect trend line, but it gives you an indication that it's a valid point of interest, and people are watching how this trend line plays out, right? And this here is also super interesting. There's those wicks, right? So you really know that every time the price comes down here, it's basically being hammered up, being pushed up by size, by people with interest who have also the means behind for the market to go higher. And now, if we take a look here on our picture, Dow up, I said consolidation and then the breakout above. So no financial advice, but one could argue that this little thing here is exactly what I tried to show here. Basically the micro pattern breakout after you've been waiting and let the market play itself out, right? So it's all about understanding structure and not being keen to jump in, and understanding how the market moves.
Yeah, like you can use the candlesticks in a way, and the lines and the pivots as your structure. And then when the time comes, this is where your strategy comes in, whether you use volume, order flow, timing sales, it's up to you to give you that extra confirmation, to place the bid in the market, and then you use your risk management strategies to where to place the bid, how many entries, how many limit orders, what you're risking on the prop firm end. So, it takes time to naturally configure all these steps, but once you get your steps, you're protected, and then you just let the trade play out, and you never deter from that plan. That's the key. And what do I do for myself? I mentioned this before. I turn off the charts. My risk management is all set in place, and then I set my alerts for when price goes into my favor, and then I make the decision whether to take it off, trail, or just let it run. So that's all up to you guys, and that's the 90% what Henry was talking about afterwards. But because we're humans, we like to get emotional. This is why I always just turn off the charts, and lets me trade with ease. And this is how I do it.
But again, right, there's no right or wrong, and that's a
Yeah.
good thing with trading. It's basically you can design it the way you want. Some are preferring to stare at the screens for 14 hours a day with 10 screens in the room. Others are just having sitting on a laptop at the beach and trade for half an hour, right? There's no right or wrong. Yeah, no, I mean,
Oh, don't bring up the beach, Henry, please.
yeah. So yeah, I should. It's
I'm going
probably
to the
like
beach then.
no, it's probably not a good comparison, but I hope people understand the point that I'm trying to bring across.
Yeah.
Like trading can give you many opportunities in order for you to design the way how you want to live, but it's not free. It's it's simple. Like trading is actually simple, but it's not easy. And that's always how it goes. It's simple, but it's not easy, and you have to earn it. You need to understand how it works. So basically, okay, let's get back to the charts, right? So it was a bit messy here, but nevertheless, so for the time being, generally speaking, we have this area here that I would watch. Oh, actually, it's a clean number. So that's the level to the upside.
It always is a clean number, Henry. It's always a nice round number, it seems.
Yeah,
Just
people
work.
love. I mean, and big institutional traders and people in general just love round numbers.
Yeah.
It's
And this is actually another little advice I can give. It's not financial advice, but I make sure I never put my stop loss at a big round number.
yeah,
Since price a lot of times likes to gravitate towards those
yeah.
areas.
So yeah, this is my like bullish number that I'm watching. And on the bearish side of things, to be honest, I'm not sure if I would like to go short already. So I think two things here. On the intraday level, I would probably go short here. No financial advice, but I would go short here because, like, let's say we go above, grab some liquidity, come down, then most likely it will generate some intraday liquidity to the downside, volatility to the downside. But then, like this swing low here, higher low is what I would be watching to break something like this in order like to make a short. And then on the bigger side of things, I want the market to break down here and then going down here, right? So basically these two short scenarios. The support area for long, basically long here as a breakout, short here if the price doesn't have enough power to go through to the upside. And then this is the hardest part for me. And I think that's the hardest part for most of the traders. It's basically the no man's land where you really need to sit on your hands and do nothing and wait. If you don't trade like on a 30 seconds, 1 minute chart, you really need to wait here because price can just chop around, right? With huge wicks, as we can see here, for example. It's just like huge candles, huge wicks, market chops around, and you need a super wide stop loss that protects you. So therefore, always be aware of this range place in between. And yeah, on NQ, and that's the thing, right? I mean, people who have watched us now for a couple of weeks know that we always use to trade with correlations. You can see that ES has the momentum behind, right? So it looks much more bullish than NQ. Sorry. But as we all know, NQ is a beast and tends just to do its thing. And let's say if ES is making 1%, then it's sometimes not a problem for the NQ to make 2.5%, 3%. So therefore, I would really be on the watch out for this level here. Let's just call it 30,000. Again, round number, 30,000 level.
Yeah, this is why I always have NQ as my leader on the ratios because it's always the most aggressive, the up or downside. And if it's always leading the way across all four, then it makes sense. But if there's always one that's a little stronger than NQ, even though it's bullish, then that's something I always look for. But we can get into that.
But now the problem is, if you have a ratio of, let's say, 2-to-1, right?
Yeah.
NQ versus ES, and you have a ratio of 2-to-1, what people are doing, they're basically just doing the same size on both and don't adjust for proper risk management. But if you have those differences, then you definitely need to adjust your size that fits the volatility, right? Because if you trade, let's say, $5 per point on ES, then you definitely can only trade one MNQ, basically $2 per point on the NQ, because the volatility is so much higher. And this is actually from data that I see over and over again, people trading with the same size on every asset, on every contract, and it doesn't make any sense, because if the volatility is, if you have an asset where the volatility is so high, you always need to count for it and to adjust your proper position sizing that fits the overall volatility. And this is actually also, I think, something that most people are not aware of, that you need to adjust your position size to the overall volatility, what professional traders, hedge fund managers, portfolio managers are doing. And yeah. All right. This is for NQES. Let's take a look at oil. So daily chart. Oops. So yeah, guys, and if you have any questions or you want to know something or understand something better, we're always eager to help you. So let us know in the comments down below, and we will get back to you. All right, oil. Yeah, also similar story, right? Talked about yesterday. Came down. We had this area here, 67, that we called out. Accepted it is now acting as a support area. Market could not follow through the 78.50 area, so that is now basically acting as our resistance level. And as long as we're not breaking through, it's not proper long for me. It might be an intraday long, right? But it's not something where I say like, right, oil is now in bullish territory. It's basically more of a sell the rip scenario, as long as we're not popping through 78.50. But yeah, as we talked yesterday about it, as long as it's weak, as long as it's sitting in the range, it will not have any effect whatsoever on the stocks. Good, guys, the market is about to open. It looks really messy.
Yeah, it's opening. Yeah, we'll have to get you the magic eraser, Henry. Because in trading,
Yeah.
I think there's a way to there should be a shortcut to erase it.
I think I just need to trade. I think I need to start working with Ninja Trader. So much easier for that.
Yeah.
All right, market is about to open, and
yeah, but there should be a shortcut. Yeah.
Let's see also triple Qs. So we had a gap down there, and triple Q is always nice to see what the market actually did. So we have the gap here, and we have, and those are tricky, right? Not pretty. I don't like I don't like this scenario, because how do you want to draw it? You can have one here. You can
the ETF gaps are tough.
You can it's not pretty. It's not pretty to the downside. But yeah, you have a couple of levels. I think basically, is it yesterday? Yeah, yesterday's low is probably the one I would watch out for. So I think if I would need to draw levels, I would make it like this. That's basically our support, the gap close, and yesterday's low, just to have something to work with. And this is what it's all about. There's no right or wrong. It's basically, you have a strategy, you design it. In my case, I like to work with support and resistance, gaps, with extremes. Steve only works with gaps. No kidding. But Yeah, it's basically you just choose one style and you stick to it, and then your eyes are getting accustomed to it. You understand its nuances of each strategy, and yeah, from there you are getting better from day to day. All right, then let's play it out. Ah, actually, wait once. Sorry, I want to see. Do we have a refresh here? I want to see if it's already available. SK Hynix. SK Hynix. Okay, it's not there yet. At least I'm not seeing it. Ah, most likely because I don't have real data. No, but actually it shows real data, right? Market open, CBO1. It's not delayed. So, okay, we will see once it pops up.
Mm-hmm. Yeah, maybe it takes some time.
Yeah. Okay, I give it over to you, Steve.
Hey guys, so as Henry said, it's always important to look at these levels. For me, I've always focused on the vertical analysis because the vertical analysis, not the vertical analysis, the horizontal analysis, because it's always going to give me clean entries, exits, also clean analysis. If I start drawing scenarios on an angle, then a lot of times it could be disrupted because the flow of time, because there's also areas of consolidation, areas of expansion. So for me, I've always kept my levels and my ideas on a horizontal basis. And yeah, as you can see, guys, there was no major, just quickly back, no major events on the calendar today, just in the Canadian news, no Fed speakers. But we had pre-market, the news come out about negotiations going on in discussions with Iran and meeting with our Iranian officials. So the goal here is to de-escalate tensions. But why am I bringing this up? Because the headline clearly made a splash into the markets. This came in right around 8:10 Eastern Standard Time, level at 29,792. So what did we get? As Henry was speaking, we got an overreaction, which always happens on these impulses, especially pre-market. This is why I always call it an overreaction. Then the clear retest. But the thing is, the retest came pre-market, and I'm never entering or having ideas pre-market. I always need to see the retest happen post New York Open, because that's where the real volume comes in. So because we got our retest and we call it the MOU 3.0, that's for today, the level impulse of the day. And yeah, look how cleanly it got the retest. But then again, for me, I'm always looking at, I want New York to retest it. I don't care for pre-market to retest it. So this is why I also draw it out on other indices. As we can see here, ES was much stronger. Henry mentioned as well, yeah, so we got the impulse, and ES was just too strong to retest it, which is fine, creating a little divergence. Let's go into Dow Jones and look at Dow Jones right now. Dow Jones is getting a nice sell-off into it. You could say, hey, this also could be a gap close. We had a small gap on the overreaction. This is why I always use that keyword, because markets need to rebalance, and Dow Jones is rebalancing right now. So let's see what happens if it can hold, or this just slices right through and brings all the indices back down as well. Russell 2000, and then yeah, look at that, beautiful. Russell 2000 smashing right through that headline of our MOU 3.0 of the de-escalation. And yeah, now we get to play some ideas. It'd be different if, let's say, all four started pulling through with no retest. Then I would just have to sit on my hands and not have any ideas, because there's plenty of time in the markets to give us trade ideas. But because now Dow Jones and Russell are smashing through that level, while NQ and ES have other ideas, this gives me very interesting play ideas. But yeah, just gonna wait, because we're only 5 minutes in, my friends. So no rush here. And this is so far on NQ and ES. Risk on fuel. Any signs of ceasefire, diplomatic news has been bullish in the market. That continues, at least on the growth side with NQ and tech. We are seeing, let's quickly look at oil for the intraday. I know Henry spoke about it, but yeah, oil right here clearly having a bearish reaction. And as long as oil, Henry, stays below this important level, 72.59. Let's just call it 72.60. For oil traders, keep it a nice round number. As long as oil stays below this level, then this bullish case for indices remains. Quickly look at Bitcoin, and yeah, Bitcoin having a bearish reaction already. Just sometimes we look at Bitcoin, see what it's doing since it's correlated. Nasdaq and ES, other risk-on assets. But for now, yeah, look at that NQ just pulling away close to just about 100 points. But these days, 100 points isn't even that much. So pre-market, I had NQ as the weakest on my ratios. Clearly, now that New York is open, it's providing a different story on the tape, and I will definitely have to readjust that live ranking. I'm just looking right now, anything else on the news front, because we had light economic calendar. Yeah, no speakers today, Henry. No speakers, no Trump. Looks like Trump's on vacation. Small joke.
There's no such thing as no Trump.
Yeah.
It's like
surprised by come in at any time.
It's like the hidden hand, It's the hidden hand.
It truly is the hidden hand, yeah. So yeah, headlines, comments could come in at any time. This is why we always say, never move your stop loss, because if you're removing your stop loss, then comes greed, overconfidence. You are erasing your trading mindset and getting into bad habits. So that's the key, and you just need to accept the outcome, whatever happens. And so many times where we had these surprise headlines, I was on the wrong side, but my risk was small enough where I didn't care if it hit it. I embraced it, and the headline came in, took me out. And then I either looked for another setup because my loss was so small where I could either rotate into another account. That could be another discussion for another day, where I'm not copy trading all accounts. I'm rotating, because if one account gets hit, I can easily move into the fresh account that hasn't entered any risk for the day. So yeah, that could be a strategy talk for another day. But yeah, let's just see how this reacts. We are close to 10 minutes in. You know what, guys? Yeah, I have the 10-minute chart right now. Reason being is because the MOU headline risk, usually I have the 15-minute, but because the 15-minute doesn't align of the exact print of when the headline came out, I like to go either on the 5-minute or the 10-minute. But yeah, 10 minutes fine. Just to make it more accurate, let me just mark this out, because this is our level impulse of the day. And then I will draw out the measured move, see where our risk is to the upside and the downside. Just give me a second. Henry, do you ever look at the DXY and the dollar, how it's reacting, or maybe the VIX is more important?
I actually used to trade foreign exchange back in the day, like many years ago, and it was always nice to have to correlate. Like I always had dollar index on my chart, like next to the dollar, euro dollar or whatever.
Yeah.
Whichever pair I traded as a comparison, because it always gave you like an additional signal. Because if the X has been struggling with the level, then you could assume that you will also see reaction. And again, guys, there's no such thing as 100%, right? But I would say more than 70-75% of the time, if the X at a proper level and could not break through, you could be sure that either euro dollar or dollar pound or whatever had also a more or less of a strong reaction if there was a level next to it.
Yeah.
And people can actually trade it, right? Even with Purdia, you can trade it on futures. So it's like 6E or 6 what's pound 6B or whatever. You can also trade on futures, so you don't need like to think, oh yeah, it's forex, I need like a forex broker or a CFD or whatever. No, you can trade it with Purdia, for example, and it's also quite liquid. So there's actually
very liquid, yeah.
There's no need for you to being stuck at something. I mean, that's the thing, right? I think this is the main weakness that we all as futures traders have. Like we have our pets, so to say, with our indices, and we are sticking to them, and we're not really looking across the pond in comparison with stocks where people use scanners and basically just going for the weakest or for the strongest one. And maybe out of a pool of 100, they like create themselves much easier chances than many times what we are doing. So therefore, guys, links in the description down below. But if you want to learn more about Steve's strategy, follow him, check his newsletter, follow Purdia if you want to get notified once we go live. It's not every day, but every other day. So therefore, follow Purdia and follow Steve. Check what it has to say. And I can tell you one thing: if you stick around for long enough, you will learn many, many new things that you did not know about, and you will get better. Trading will get better.
Yeah, exactly. And I'm always developing. I'm always evolving. And the one thing I like to do is I like to measure out my pivots. So we had the headline that came in pre-market, and I set this up now on DXY. So clearly it was a risk-on scenario. The dollar sold off, but it seems like it's reclaimed it, and the dollar's looking bullish now, which is interesting. And end of the day, the DXY, the dollar, especially the euro, because DXY is mixed with the US dollar and the euro. These are still safe haven flows in the market. So whenever markets are selling off, it goes back into the dollar, into safe haven assets, which is cash end of the day. So it's always good to look at this. And sure, yeah, it will affect the FX side a lot more, but it will also create a scenario, an idea for you on an intraday basis when looking at NASDAQ and indices. Individual stocks, not as much, but yeah, when looking at tech and ES, then a lot of times it's good to have these charts up just to see the overall sentiment. And it looks like DXY has overtaken the bearish setup and creating a higher low for now. So yeah, just the idea, you guys, another area to look at, another asset class. Seems like, and we're looking at NQ right now. NQ had a little sell-off, possible retest.
That was basically 2 minutes, like 2-3 minutes. We went out there, you made like 150 points. Let me.
Yeah, 150 points. But yeah, it's the first 50 minutes, you guys. Volatility is high. Just to quickly look at ES, how it's reacting. For now, NQ, or actually, let me just readjust the ratios, you guys, because I have NQ as the weakest pre-market, but looks like NQ is overtaking other indices where the flow has changed. But you know what? The flow has changed for the time being intraday. Sorry, when zoomed in on the first 15-minute print, but NQ is still weaker than ES from the daily open, still weaker than Dow Jones. However, looks like Russell 2000 is overtaking. So this is a little spread that's happening right now where Russell 2000 is actually acting a little more aggressive than NASDAQ. And this is what I like to see. Beautiful. Okay. So we'll keep it NASDAQ as the probably third. You know what? Since RTY is taking over NQ, because remember, this is the ratio, you guys, NQ comparing to RTY, which means actually RTY is not the weakest per se. Apologies. No, sorry. RTY is not being strong, but it's being weak because it's the ratio compared to NQ. Yes. Okay. Sorry, Henry. So what we're going to do is we are going to reevaluate the list and actually put Russell 2000 as the weakest. And then let's just quickly go in the chart and look at the sell-off on Russell. Wow. Big sell-off. This is what I want to see. The clear spread in assets, the clear rotation, showing me, how the ratios cutting through the noise, real conviction, and where they want to go when comparing level to level. So because actually Russell 2000 right now is the weakest, let's quickly mark out our risk to the downside, my friends. Okay, we got the headline risk at through 3006. Like, keep it a whole number, but we'll keep it like that for now because we know the numbers are much stronger on Russell 2000. We had the New York Open. Let's measure out the New York Open. Where was New York Open? New York Open was, right around here. Boom, right there. Done. On Thursday, nice and close. Keep that support area. This pivot was support, but now it's looking as if it's going to be resistance, market creating some supply on the top end. Let's create the measured move. I'm just going to zoom out a little more, you guys, see if we have another opening of New York that will create a better pivot scenario. Seeing the open from Wednesday. And you know what, Henry, look at that. Open from Wednesday is actually pretty close to that pivot line, but I think that's good enough. It's good enough for the measured move on Russell 2000. That's just about 180 points. And the sell side is much stronger on this asset. So this is our weakest asset class of the day. Now let's quickly do the measured move. No script, my friends. Always doing this live in front of you guys and talking out loud as well, just to make sure I'm focused on the idea. And where was New York open from Tuesday, and see if this lines up. Very close. And there was New York open. Oh, we almost got there, Henry. A few points away. But what I always do is I measure out the move in the clear direction it's currently at right now. I'm not saying the direction will continue, but I'd mark it out from the impulse, the overreaction from the day, since we're intraday traders, to the downside, since we had a bearish move on Russell, and now to the upside, which is at 3,029. And that looks very interesting to me on Russell. So yeah, we'll keep those pivots right there, you guys, if anyone's trading Russell 2000. Let's go back to NQ. NQ is holding up. ES and Dow Jones. Yeah, Dow Jones is retesting level, but looks like, hey, this is very interesting, Henry, where ES is actually the strongest asset class of the day. To measure out New York open to the downside and also to the upside. But what I want to do actually is measure out risk to the upside, since ES is having strong momentum.
I've been wondering, my mic was off. I was just saying ES is basically sitting right at our 7,600 area.
It keeps pushing higher. It's crazy. Like NQ is still stuck in its range, but ES has been an aggressive. And it doesn't happen too often, you guys, but it has happened plenty of times in the past. Not as often as NQ, because when NQ moves, wants to make the pressure either to the up or downside, it goes first. But looks like ES, you guys, is indicating the divergence play. And where is the risk to the upside? It's a little far away, but then again, yeah, we are only about 20 minutes after open. Let's see if this all lines up. Measured move from 75.81 on ES to 76.27. So I might be trading and looking at ideas on ES, you guys, not NASDAQ, which I'm fine with because ES sometimes makes me a little more comfortable. I'm not gonna lie. It doesn't like to swipe as often, but this is why, you guys, you have to set up your risk management. You have to be comfortable with the risk you're putting on. And these are the levels for ES. Boom, done. These are levels for ES.
But that's actually today a perfect example of what we have been saying for a week now and trying to bring across is the market intercorrelations. They are really, really strong, right? So it's basically what I said in the beginning, that the sign of the breakout to the upside has been already made by ES on the chart, right? And so therefore, if we have this kind of scenario, then you always need to be really, really careful on NQ. I mean, you don't need to go long automatically, but be careful with your shorts, right? Because then if ES is making its way up, then you can be sure it's a matter of time till NQ tries to catch up. It doesn't mean it will happen instantly. It doesn't mean it will happen today on the same day. But sooner or later, the spread between those two always closes.
No, exactly. The spread closes, doesn't have to close on the day itself, but I've seen it even close after hours in the pre-market for the next trading session. But then again, you guys, it's Friday. Don't put on too much risk. Enjoy your weekends. Protect your mindset. Trade a few accounts. Don't be copy trading all accounts all at once. That's the only advice I can give. Of course, no financial advice, only prop firm advice. Protect yourselves. But look how cleanly this pivot lines up on the bottom side, Henry. But what I did was I measured out the possible risk scenario to the upside. This was the largest print of volume that came in on Tuesday, created a high level of supply because we were not actually we were not able to reach that area for how many days now? Let's see. For 23 days. So 23 days, you guys, we have been below this area. What does that mean? That means that this ES has been creating lots of supply below this area for a while. It was not able to hold up or break. So yeah, that's a lot of orders of supply. 24 days, not able to reach. Will we reach it today? Quite possibly, but no guarantee. But important level up above at 76.27. And then what I did was I lined up the measure move to the downside, and you look at the measure move to the downside, how once, twice, 3 times as support, fell through, retesting as resistance, and then finally retested it as the final area of support on Thursday. And now we are coming up into balance. So very important levels on ES to keep in mind. Looks like all the touches made sense from previous days. This is what I like to do. I zoom out and make sure my pivots make sense. If it doesn't, then I rewrite and I try and figure out what does make sense, because you never want to be confused in the markets, you guys. You always want to see what is lining up and what's giving you the best opportunity. And for today, ES is in first place, giving us the best opportunity. So let's mark out ES as number 1, you guys. The strongest asset class for the day, and Russell 2000 for now looking at the weakest. So yeah, NQ catching up, like Henry said, also printing bullish momentum. Let's see what happens. We're closing in on the hourly close in about 6 to 7 minutes. No news from my end. Do you see anything, Henry, on your end? Any surprise headlines?
No.
So
nothing.
So you could say this is just price action moving north after New York Open. It's accepted these prices. It has accepted the retest of the news. You could say the overreaction, the confirmation, and now going up. So,
and that's the thing that I want to add here is, as you can see with Steve's levels, they are basically not sitting at the extremes, right? They're sitting in the middle, or they're sitting between areas, and it doesn't matter because Steve doesn't trade with 10 stops or 15 stops, 15 point stop losses. He has, like, I don't know, 40 points, 50 points in the NQ, 70 points in the NQ. So it doesn't matter to him if it's like sits directly, directly at the low to the tick, right? And the market can circulate, and he gives it enough room to circulate. So therefore, the strategy for Steve makes total sense. He rotates the accounts, account by account, so it gives him more chances per day. He doesn't rush. He doesn't try to leverage. I mean, at Purdia, we've been, I don't know how many times I've been writing about this and also mentioning it all.
You will continue.
Yeah, we will keep on preaching about this. It's not about leverage. It's about diversification. It's about risk management. That multiple accounts means that, like, we want you to stay in the game for longer. It doesn't mean that you need to. That it doesn't mean that you trade all of them the same way and just copy trade them blindly. And that's the thing. I mean, you can copy trade them once you're in the live account, let's say with Purdia, and we have the static drawdown. The buffer grows with you, so you don't need to worry. You don't have any pressure. You don't need to jump hoops in order to get a payout. You can, like, take your time. You can grow up your account size, and then you can start copy trading, because then the buffer per account is so big, so you can make proper risk management. But if they're like, for the time being, if you just get an instant funding account or an eval account, there's not enough room for you risk-wise to copy trade them, like, and to make it safe. Actually, there's one asset, but almost nobody trades it. It's the micro DAO. That's the one that you could really make work copy trading, because
whoa! I've traded the micro DAO, Henry. Come on, I've traded.
Okay. You are the single one person in the whole database who trades micro DAO. No jokes aside, but this is like, micro DAO is really one of the few contracts that you can basically, no financial advice, but you could make work copy trading, right? Because it's like 50 cents per point. So you can actually make it work risk-wise, because if you're risking 100 points, like $50 on a 100K account, you can make it work, even copy trading. And usually on DAO, if you're cautiously, you can also trade it properly with 50, 60, 70 points, depending on your strategy. And that can work, but it's basically the only asset. If you have another one that's also as cheap risk-wise as DAO, let me know. But
Yeah, DAO seems like the safe bet with, creating that discipline, that patience with you guys. Henry was saying, take your time. Why are you guys in a rush? I don't understand that. 99% of people have a job, they have the income that provides either for their family or their lifestyle, and they're taking up trading because it is truly highly rewarding skill set to have, but it will not reward you if you guys rush into it and you follow a lot of these people online that are pushing the crazy 50 account copy traders, gaining 50K in a day. You guys, come on, you are smarter than that. You know what the deal is here.
Yeah, but the problem is it's luring, right? It seems easy, and I would hope that there would be more transparency in this field, like also with the guys who showcase making hundreds of thousands with I don't know how many accounts, and then nobody knows. Okay, it took them like 3,000 accounts to blow through in order to get these results, right?
Yeah.
And that's the thing. So yeah, take it slow. Take your own, do your own studies, and create your own systems. Never follow anyone's copy like trades blindly. Only trade your own system. And that's the thing. If you just trade the system blindly and copy their trades, you might get a payout here and there, but it's not sustainable, right? It's not sustainable. It can work if you are living in your parents' basement or something like that, and then you get a payout here and there. But to be honest, like prop trading, especially Purdia, we offer you such amazing opportunities to grow, to become a professional trader, and also to become a big trader if you are consistent enough and you know what you are doing. But in order to achieve these results, to get this consistency, you need to understand all the ins and outs of trading. And this is more than just following people blindly and don't understand what they are doing, right? It will not work. It's then you can also just play a computer game, will have the same impact, just cheaper.
Yeah.
Most of the times.
And less rewarding.
Yeah. All right, everyone. We wish you. Sorry.
Henry's MOU 3.0 is holding you guys.
You see the magic line.
Yeah.
No, and again, right? Like it's not about the line in the sand itself. It's more about that you create a strategy around your own thinking. So for Steve, this strategy works. If I would start trading again, I would work with my supply and demand and gap strategies. Those work too, because I'm familiar with them. I know how they works. My mind is trained. My eye is trained on them. For Steve, his strategy works. And so again, there's no right or wrong. It's basically just take one style, learn everything about it, backtest it across different markets, across different time frames, across like different market cycles, and just stick to it, and then learn everything that you can about it. Like have a proper process in place for risk management, for size management, for mind management, also like psychology. Do track your trades so you can understand them, make a review of the trades. If you don't have time to do it daily, then at least track it, make screenshots and review it on a weekly basis, right? So it also has and then maybe one advice here at this point in terms of reviewing, it's super helpful if you have the screenshots before you make the trade and then after you have done the trade, or like, let's say by the end of the day. So you always can compare what have you been thinking at this point in time where the chart is not completely being played out, and then to how it finally looked. And then if you compare it, you will gain you will gain tremendous value from this. But again, it's work, right? It's not sexy. It's not sexy as just sitting in front of the computer and pushing buttons, long, short, reverse, cover. It's like, this is actually where the works begin. It's basically as a professional athlete. This is the same concept as having training and doing your program twice a day for 3 times per day, right? And yeah, all right, let's keep it here. Everyone, have a good weekend. I wish you all a good trading day. Trade safely. Be aware of any incoming news that might pop up from any corner.
Always be aware.
Always be aware. So yeah, risk management is key. And yeah, good luck. See you on Monday, 9 a.m. Eastern.
Yeah, thanks,
Follow
Henry.
Purdia, follow Steve, and yeah.
Have a good weekend.
Ciao, everyone.